Thank you. We'll take a few questions. We'll start with Bloomberg Quint.
Thanks, Governor. Ira from Bloomberg Quint. Governor, we are now 2 rate hikes behind us. We also have inflation projections up to Q1 of FY20, which say that we will remain above the 4% mark. Against that backdrop, sir, can you explain a bit more about why a neutral stance is consistent right now or is appropriate right now?
Well, many of the risks that we have cited, which informed our projections, are on both sides, and that's why we have said that these projections are against the backdrop of balanced risks. Secondly, there is a fair bit of uncertainty around the CPI prints going forward, and therefore it was important that we kept our options open depending on the prints coming during the over the next few months, given the volatility of the prints that have that seem to be coming most of the time. So that's why we emphasize that we would need to monitor the domestic inflation outlook in the coming months very carefully. For these 2 reasons, the stance is retained at neutral, and the risks around the projections are balanced. Thank you. Nikkei.
Thank you very much, Governor. Actually, I envy these numbers coming from Japan, where inflation rate is always de facto minus, and interest rates are always minus these days. Well, anyway, I wonder, in medium term, what is your diagnosis of cause of rising inflationary pressures, especially in the core inflation? And how does that diagnosis affect the judgment today?
I'll request Dr. Michael Patra to address that.
It is difficult to set out exact projections for the items in the core inflation for the medium term, but currently we are seeing pressures getting generalized across services, particularly, especially health and education, and a large number of miscellaneous services which enter the basket of the common person. Thank you.
What is the cause of that?
There are several causes. Some of them are cost push, like Governor indicated, there are input costs feeding through. There are also some staff costs in the organized sector which are passing through. Also, there might be demand pressures starting up.
Economic Times.
Thank you. As the geopolitical risk uncertainty is looming large and trade war happening, so what is the possible outcome or fallout on the Indian economy, and how is RBI preparing to trade with that, given the to maintain stability in the money and currency market?
Well, we have already had a few months of turbulence behind us, and it looks like that this is likely to continue. For how long, I don't know. But the trade skirmishes evolved into tariff wars, and now we are possibly at the beginning of currency wars. Given this, we have to ensure that we run a tight ship on the risks that we control to maximize the chances of ensuring macroeconomic stability and continuing with a growth profile of 7 to 7.5% going forward. We do have things that are in our favor, which you are aware of. And if we continue along that path, we ensure that we don't add to the global risk profile that would adversely affect us. Thank you.
Thank you. In India, we have 3 banks which are too big to fail. One of them is in the middle of a huge controversy following allegations of conflict of interest, among others. There are regulators like the SEBI and ACC are engaging with the bank. Is there any engagement from RBI also, and if there is a bigger issue of governance in the private sector banks?
Mr. Vishwanathan?
I think it's not appropriate for us to discuss any specific bank, but I must tell you that we are alive to what is happening in the banking system, and we are dealing with those situations as they are emerging. But I cannot mention what we are doing with a specific bank. As far as too big to fail is concerned, there's a global standards on that. We have issues like DSIP being identified, additional capital being maintained. All those principles they are adopting in India as well.
PTI?
Good afternoon, Governor. The policy gives a lot of reasons for what you did today, the hiking the rate. But at the same time, the risks are evenly balanced, even to the inflation. So what was the main drive for hiking the rate today? It leaves me confused. Is it the non-inflationary factors, especially the trade wars, or something else?
No, the main reason for changing the policy rate is to ensure that on a durable basis we come to and maintain the 4% target. And we have been away from the 4% number for several months now. And we took two steps, one in June and one in August, to maximize our chances that we don't drift away from 4%, and in fact we move towards 4% on a durable basis. So it's based on the objective that has been given, the data prints, and our projections going forward.
So we could possibly take one more question.
Thank you, Governor. Sir, even as our inflation is below 5%, but the core inflation is touching 6% or has crossed it already, may cross it already. So what is your fear around that core inflation part? How much is core inflation a concern for you, especially after and add to it this MSP has come, so it is already touching 6%.
You know, our mandate is to target the headline, and therefore, while we look at the components that make up the headline, our focus in terms of the policy choices is to get the headline to 4% or thereabouts. So while it gives us information, you know, it's not just core. There is core, and many others, as many as people want. The legislated target is on CPI headline, and our policy is oriented to keep that at 4%. Okay. Thank you.
Okay, that's the RBI governor. Let's get back to our panel of experts. By the way, the market has taken this rate hike in its stride. Banks are rallying, bonds are rallying. We need to get those rates up on the screen for you. There has been a very swift reversal on the Nifty Bank, but again from the peak, there's a bit of pressure that's building, and you'll find it a very volatile chart. Let's get the Nifty Bank chart up for you on the screen if we can. We should also pull up the 10-year benchmark bond yield. And that's the Nifty Bank. That was a sharp reversal that was coming in. Just flip that with the 10-year yield as well, because after touching 7.8, soon after the announcement, the reversal is back now to 7.73. So that's what's happening.